Today we're breaking down every trade that I took on Eurusd. Altogether, I took 4 trades on Eurusd this week, and we're going to go ahead and break it down day by day. So first off, just to give you guys some background on this, I'm expecting Eurusd to be bullish from here on out. It doesn't mean it's going to be bullish, but this is just what I want to see. I want to see some bullish price action. And so when price is dropping, this was the video I went through last week. You can go ahead and watch that video on YouTube after this video where I broke down a sell that I took here. Okay. There we go. So here are the trades. I'm not talking about this one. This was the one I spoke about on the very last video. So go ahead and watch that video if you want to know about this trade here. I want to be talking about all of these trades. As you guys can see, there's 4 trades here. You can see on Monday, this is a new week. That's why I got my NW here, new week. Monday, I didn't place any trades because generally I like to let Mondays play out. So now what I'm going to do is I'm going to go ahead and zoom into these trades here that I took on Tuesday to break down what I was seeing and everything else. All right, so first off, you can see our down close candle here from the very highest point to the very lowest point down here. I'm going to extend it all the way to the right. And you can see our down close candle. I'm going to also mark it up as well. So the reason I marked up the Fibonacci tool was just to show you where 50% is. And just a bit more of a background, I do want to see price push off from here. It doesn't mean it's going to happen because I don't control the markets, but I'm going to trade what I see. And right now, I'm not trying to pick a top with the DXY. This is ideally where I want to see a turnaround. If it does not turn around from here, I'm going to have to switch my bias. Regardless of whether your bias is bullish or your bias is bearish, at this point, you can still capitalize on moves, both buying and selling. First off, this was my down close candle. I generally like to see price come into the very highest points and then turn around. If it doesn't, I'm going to wait for price to get to 50% before I take the next stronger bullish stance. Anyway, like I said, Monday, I let things play out. Sometimes you need Monday to play out so you can pick a better weekly profile for the week. A lot of people like to get involved on a Monday, but then Mondays are normally messy Mondays. I'm going to go ahead and go to the 5-minute time frame for Tuesday. This is Tuesday. You can see new week, Monday. We got Tuesday here now. And I'm going to break down how the trades went down here. Normally we get some kind of accumulation in Asia. Asia for me is always an accumulation of orders. I never trust anything in Asia. And also I'm sleeping during that time. So honestly, I couldn't care less about what's happening in the markets at that time. But I did get active during the London session. That's the session I wake up on. That's the session I'm active for. And so what did I see? I saw price was rallying higher. Yeah, taking out some highs. And then we began to drop lower. So what I mean by that is you see these higher highs, you know, price makes a higher high, makes a high low, higher high, higher low, higher high. Eventually we get beneath this low here. This 1-minute low was key. This 1-minute low right here is key. We break through that low, we come up and we drop again. And so now what I'm looking at is I'm looking to see whether we can get any kind of response off of this level here, this buy candle up here. We get a response and we drop to the downside again. And I know it can get really confusing with looking at the various different highs and lows. Like for example, this one has multiple highs and lows. But in my eyes, all I see is one push higher to run out the liquidity above that high, and then a retracement and then another push higher. You don't want to get all caught up in these little smaller micro high highs and high lows. They will get confusing. I look at the cleaner moves. So now when I zoom in a little bit, you can see here, let's just go ahead and just mark up a few things here. You can see this is the very beginning of our up close or upward move. Price trades into that a few times and then it drops. I was selling from this imbalance here. When price traded up into this area of inefficiency, I had my stop loss above this candlestick's wick. So I'm on the 50-minute time frame now just to show you guys where I was aiming for. And I was aiming for this down close candle. So from the wick high to wick low, this is exactly what I'm aiming for. I'm going to go ahead and put on some more align just to show you guys here. This is the very highest point of my institutional candle or my down close candle, and then I also had 50% of this marked up as well. Let's go ahead and mark up 50%. So I'm just using a fib tool at the moment just to get the accurate 50% levels. There's the beginning of my down close candle. Here is roughly about 50%. So that's what these 2 lines are. So now you guys know what we're referring to here. So now after I caught my entry, so this is the imbalance I was entering on, and I had my stop loss at this high over here. I was targeting the very highest point where I was going to take off 80% of the trade, and then I'm going to let the rest ride to get to 50%. And as you guys can see, price got down there, and that was Gucci, that was blessed. That was fine. So let's go ahead and show my annotations for that real quick. Here's my entry. You can see there's the inefficiency here. You can see right here when it dropped into this level. You see how it missed it here? It came maybe about maybe just under 2 pips away from my TP. when it started retracing, you don't bail out when it starts retracing. You might want to move your stop into profit if you're panicking, or you might want to take some partials off when it starts moving up. But then if you know where price is going to, I knew that price was being drawn towards this candlestick here, this down close candle. Hence why I was able to take EU to this level here, where I took 80% of the trade, and then I let the rest ride where it just hit TP right at 50%. You can see right to the T. 50% right there. Now I'm going to go to the 50-minute time frame. So I've just taken off those executions now. So that was the first trade. We got down to this level. That was blessed. That's cool. And at the same time though, if we look at this now, we have an up close candle in here, and price then makes a move to the downside again, taking out this low. So I said to my mentees, as long as price stays beneath this high right here, I will continue to be bearish. If it trades above this high, I'm going bullish. And that means after retracement, I'll be looking to go long. This high was key for me. So here's my 5-minute time frame. This is the exact same day. As long as it stays beneath this candlestick's wick high, I'm going to be bearish. This is the most important thing when it comes to looking for points of interest for where you want to take your shorts from. On the 1-minute time frame, we're looking at this candle here, this buy candle here. This is an up close candle. But before that comes this imbalance. So I'm going to go ahead and mark up this area of inefficiency. This is my imbalance. I'm going to go to the 1-minute time frame to get even into more detail right here. I'm on a 1-minute time frame now, and you can see where our area of inefficiency is. You can see only sell candles here. No buy candles whatsoever, just sell candles here. After price dropped, made a new low, I waited for a retracement back up into my first point of interest, which was this imbalance over here. This was my first point of interest, which was the imbalance. I believe my stop loss was above this candlestick's wick, or nearabouts this candlestick's wick here. So for this trade, I did end up moving my stop, and then it got stopped out anyway. So it is what it is. That's fine. It happens sometimes. You're not always going to win every single trade. You guys know that. You guys know this already. As long as it stayed beneath this high, I was going to be bearish. And so what I saw then going forward was price rallied higher into our 1-minute up close candle in here. And so when I saw that, I said, okay, cool, I'm going to go ahead and jump in again. This is going to be my last opportunity at catching a sell. I was looking to see whether we could run out some liquidity to the downside. Well, technically, I wanted one more push lower before we go higher. I ended up jumping in one more time for a sell in here. So settings, executions, there we go. This was my entry. I jumped in here, got stopped out right in here. I did jump in one more time, and I got stopped out again right here. And my stop loss for this one was above this high, hence why I got stopped out right here. From last week Friday, from a winning trade on Friday to a nothing on Monday. Tuesday, the first trade during the London session was a beautiful trade. Took 2 losses in NY. And then we come to today, Wednesday. For today's price action, today's Wednesday. So in Asia, we accumulated. In London, we had a beautiful dip. You know, lots of manipulation here, taking out all that liquidity to the downside. We see a down close candle. Let's just zoom in on that down close candle. Here's our 1-minute down close candle. And you can see when the price gets back into this down close candle, you're seeing that mitigation taking place. And then we get that movement higher. And the beauty about all of this is you don't have to catch it from here. It would be nice to catch it from there. You could miss this for various different reasons. So for myself, I was very, very busy. I wasn't even looking at this. And so when I got active was a little bit later on in the London session. So roughly about 10 o'clock in the morning right here. Where I get involved now is this order block here. When price produces this order block here, this is where I jump in with my sell. I believe I jumped in on this candlestick here. And the initial targets were here, but I did decide to push it up higher to see whether we can get something a little bit more. And I believe it's on a 50-minute time frame. You see the order block, here it is. So I'm going to go ahead and mark up this order block. This is our 15-minute order block. And so my buy that I took from roughly about here, I took it to this order block here. And I didn't take it to the wick. I took it to the very open of that order block. And then I let the rest ride to see whether we can get just above the order block. And so that was the move for today. You didn't have to catch it from the lows. There was more opportunities to catch it on the way up. So don't be that person that if you don't catch it from the lows, that's it, you're a bad trader. You don't always have to catch it from the lows. And to be honest, your aim is not necessarily to catch it from the lows and take it to the very highs. Because how do you know when it's going to turn around? You don't know whether it's going to start from here, whether it's going to start from this down close candle 50%, the very open, or whether it's going to dip into these wicks. Do you understand? And at the same time, you don't know when it's going to end. Obviously, it's a very good thing to know that once it takes out a high, you take something off the table, or if there's something directly above it, then you look to take something off the table at that point of interest. And then at the same time, when it takes out daily highs, then you should be looking to take partials or closing your trade. So you have to remember, price is more likely to turn around once it takes out liquidity. And so I know people who ate up on this move and then ate up on the way down. Don't be that person who's holding on to this trade here, holding on, and then this happens. That's greed. You can't just be holding on just for more and more and more and more and more. Eventually, you're going to have to TP, or eventually it's going to hit your stop profit. That's a good idea. You know, having some kind of stop profit in place. But don't be that person who's looking to jump in and just keep on buying more and more and more and more. Look, it took out this point of interest here. It took out the liquidity above this high, dropped back down into this order block here. But look, it violated the order block. You have to learn to be satisfied. It's as simple as that. Are you satisfied with this move? Higher. Are you satisfied with a move like that? These moves, I think the first one was from thereabouts here somewhere, so somewhere here. These moves are like 15 pips scalps. You know, 15 pips to 20 pips scalps there. Let's go ahead and check out this one. This was a loss. These two were losses. And then we jumped in again roughly about here. We took it to all the way to this high, roughly about 20 pips scalp. We don't trade pips, but I'm just using pips just as an example. You can't be that person who's always holding on for dear life, going for more and more and more and more. Be satisfied. You want to focus on catching your portion and be out of the markets, because these markets aren't there to be friendly with you. But the markets are designed to run liquidity, and you're also part of that liquidity. Just be mindful of that. And like I said, I know people who ate on the way up and others who ate on the way down. But what you don't want to be is that person who eats on the way up, doesn't close the trade, and it comes back to take you out. That person will never succeed at trading. Let's just put on all the executions now so you can see all of it. That was Friday. Monday left it. Tuesday, you can see the entries. Beautiful move to the down close candle. That was perfect. 2 losses in here, you know, trying to sell beneath this. But what did I say to my mentees? I said, if price takes out the 15-minute high, which is this one right here. So this is why I was selling, because price hadn't taken it out yet. The moment it takes it out, like it did here, it took it out right here, it meant that these highs are no longer being protected. And so once price retraces into a down close candle, once price retraces, then look about catching your buy. This was the whole reason behind my buy here. I didn't catch it from the lowest point. I don't always catch the low of the day or the high of the day. The aim is not always to catch the low of the day or high of the day. The aim is to be in the trade, get my piece of the pie, and be out of the trade. Let's just say I'm trailing my stop loss, trailing my stop loss, trailing my stop loss. The moment it hits my stop profit, done. Don't need to trade for the rest of the day. That 1 minute time frame, look at this. When price is pushing up higher, when it retraced a little bit, start pushing up higher. Let's say you was trailing your stop loss now. When it takes out this high, you want to put it beneath this low. Just trail it. Keep trailing it until it violates one of the lows. Do you understand? That's one way of getting out of it. That was one of the things I used to do back in the day. I used to stay in trades and just hold for dear life. And eventually it will come back. And it's happened so many times that I get mine and I'm out the markets. And then just lastly, you're not always going to win every single trade. On this day, it took me a little bit of time to know when to stop. That was my short from here. I took 2 more shorts, keeping the line. They got violated. And this happens. It just made me be even more careful today and say, once I got my piece, I'm out the markets. I'm not trying to get any more. I'm out the markets now. I'm done.